In this edition of INN CEO Talks, we're talking about royalties, but royalties in an unexpected market. Electricity, specifically the electric vehicle service sector. Joining me now is Brendan Yurik of Electric Royalties. Brendan, welcome.
Yeah, thanks for having me on. I would maybe call it clean energy metals versus electric services, but no, it's an exciting sector. I mean, we're the only royalty group out there right now focused exclusively on all those metals really required for the transition to clean energy. And it's crazy. I mean, this is a sector that basically didn't exist, going back 5 years. But you look forward 20 years, and we're supposed to be the oil and gas equivalent. And that's a sector that's traditionally 4 to 5 times the size of the historical mining sector. So I think this is an exciting place to be, and definitely an area for lots of growth.
So it's quite a fascinating business model. Give us as succinct as you can, understanding or definition of what your model looks like and why you chose to go in this direction.
Yeah, so we're a royalty company. That's a business model choice that we made right out of the gate. There's a lot of different benefits to a royalty company. Essentially what we do is we give companies looking to develop these mines of the future that will supply the nickel, lithium, and cobalt that we need, money up front today to develop their asset and push it forward at a time where, they might not have access to equity. Equity might be too dilutive. And so basically a royalty is a right to the cash flow from that mine, essentially in perpetuity. And so, we basically give them some upfront capital. They move along. When they're in production, they'll pay us, say, 1% of cash flows right off the top. But we don't have to contribute any more development costs. So we're not on the hook for exploration costs, development costs. We're not on the hook for the cost of building a mine, hiring a huge team to do that. And so once we have a royalty, it costs us nothing to hold these. So they're very long term. They tend to pay out over 10, 20, 30 years plus. And so it's a good space to be. I mean, it's a little bit less risky. We're diversified. We've already got 19 assets. And all of that is being funded, all the work on those assets being funded by third parties. So that's definitely, the business model, I think, is a big part of it. The other definitely being, the space that we're in.
You talk about 19 different properties. Give us a sense of what exactly are the metals and regions that you're into within that portfolio.
Yeah, so it's funny. I mean, we're a first mover, right, in this space. We've done a few of the first deals on some of these clean energy metals. I think we did the first graphite royalty financing ever done. So, we're a first mover. It's funny. Our goal is really to buy royalties on those deposits in North America, Europe, and Australia that could be a domestic safe source of supply for the gigafactories under construction in those regions. And when you look at domestic supply, it's there's a few of these metals where there's only 1 or 2 deposits, say, in a region as big as North America. So, we just picked up a royalty on, for example, Sleetat tin asset. It's the top tin asset in all of North America. And we picked it up relatively cheap. We've got a royalty on the only manganese district in all of North America being developed for the EV space. We've got a royalty on a producing zinc mine down in the U.S. It's owned by Traffic Europe. It's vertically integrated with the Clarksville smelter, which is the only primary zinc producer in the U.S. So we've gone out and got a lot of the one and onlys, for the best deposits really across the 9 metals that we're targeting in those jurisdictions already. So it's exciting. I mean, a lot of these, we had $150 million raised last year by operating partners, and a lot of that money is going into the ground, into our assets this year. That's 5 times our market cap today, all going into the ground at no cost to us. So it's going to be exciting. We've got a lot of developments coming out. We've already had, I think it's about 17 developments on our assets this year already. And that's across 10 different assets. So there's a lot of work going on and a lot of growth coming in our pipeline.
So we know the royalty model works. You're focusing in on those assets that are definitely going to be in increasing demand as we move into a more electrified world. What's the number one message that you want investors to take away right now as they make their determination about your company?
Yeah, well, I mean, look, we're one way for investors to basically get exposure to the entire EV space. and this entire transition to clean energy. The metals that we're targeting are those very fundamental building blocks that are going to be required to get us there. And we're staying diversified across each of these commodities. We're not making a bet on any one. We're not making a bet in terms of where battery chemistries go. These are non-dilutive royalty interests in these assets, in this metal in the ground. It's very good in an inflationary environment, which is definitely on everybody's minds these days. We don't have capital cost inflation because we don't have to contribute that. We don't have operating cost inflation because we have no operating costs like an operator would. And we have no ongoing holding costs. So it's definitely a business model that I think fits this current environment.
Wow. Okay. As I say, when I went to your website, I was fascinated by, your model and the markets that you're into. Because you're in this model, you're also constantly identifying new properties. What's the process that you go through to confirm that this is one that you want to be involved in?
Yeah, well, for some of them, it's kind of easier, where there might only be one or two assets really that have a resource or, that we think are even possible for some of these metals in a safe jurisdiction like North America. But we've already looked at most of these assets. I mean, the very first thing we did before we got started was look through the supply side for each of these different 9 energy metals, and really kind of get a sense of which ones we thought might make it production. So we're proactive about it. I mean, yeah, we are opportunistic, when deals come our way, but I'd say we're very proactive. We really already know the assets that we want to go get part of. And so it's more of we already did this work to identify them and figure out exactly which ones we thought and go chase them rather than the other way around.
Remarkable business model that you have, and I'm hoping that you'll come back in a couple of months and give us an update on new projects that you've added to your portfolio that appears to me to be ever expanding.
Well, yeah, no, look, we only launched public in the middle of COVID, June 2020, and we've already got 19 assets. I guarantee we'll be adding a few more, before I come back on. So we'll have more to talk about for sure.
Well, yeah, and you were able to raise a significant amount of money to get going, and which speaks to the level of interest and the promising future for the market.
Oh yeah, look, I think all the upsides from here. Lithium prices last year were up 400%. I think the highest gold price increase on an annual basis was ever 25%. Most of the metals that we're targeting are up 100%. Now, some of those lithium 400%, that's a little bit high. It probably should have a bit of a pullback. But the next 10 years look great for each of these metals. The supply side's very, weak, and the demand side is something we've never seen before. So it's going to be definitely an exciting, I want to say decade here, but definitely the next couple of years are going to be fun to watch.
Wonderful. Thank you for your time today.
No problem. Thanks for having me on.